everybody, hope we are doing well and welcome back to another Sunday Sessions video. Now if you haven't watched one of these before, it's pretty much where me and Luke, we go through the Forex market, we show you our analysis, we give you our story, our bias, in hope that you can take some of that information away and actually implement it within your strategy, see what we're looking at in the market, and you can see our bias and how we want to be involved in these markets in this coming trading week. So if you're not already, make sure you are in the Learning Lounge, the LAGFX Learning Lounge. Link is always in the description. The reason why it's important to be in here is because as the week goes on, as price plays out, we will update the analysis. We will show you how it has played out according to our story, our bias, and also any potential entry opportunities that we're looking at on those markets we have analysed. So today I'm going to run through a couple of pairs and then I'll pass you over to Luke, who will do the same. So I am starting off here on the Australian dollar to the US dollar. Now the reason why is because I believe price is in a fairly pivotal point within which we can pretty much try and determine what the future trend of this market is. So looking here, we have pretty much just simple bearish structure. So impulsive wave down, correctional wave back up, impulsive wave back down, correctional wave back up. Now what we've done is within the last buy to sell, which on the monthly time frame is the last buy candle, we can see that price, it came up, it mitigated the last buy to sell as we want to do in bearish structure, and then we found a distribution, so a Wyckoffyan schematic, the shift of weaker to stronger hands, the manipulation, and then the ultimate reversal. Now after this, and after we began to displace and break structure lower, our bias is that price is going to want to put another impulsive wave lower. So this arguably being our overall final target. So we're slowly waiting to see price just keep trading down now within this medium term bearishness to trade us all the way down to this region. If we dive deeper into what's happening here, we can see that since the distribution, we have this unmitigated zone higher. Now price has continued to play out since this zone was left unmitigated, so we made the assumption that what was going to happen is price was potentially going to leave this zone and continue running the liquidity lows, continue producing bearish structure lower. Now to me, from here, we've had this market high, impulsive wave lower, correctional wave, which comes to mitigate positions up here, another impulsive wave lower. This is a correctional wave, and then the second that we break this low, this becomes a protected high. So we've traded down, another correctional wave put in place to mitigate this last buy to sell, and what you'll see is that price actually breaks the low. Now this move here comes to break the low, so what that means is that this right here should have been a protected high. You'll see that price has actually come, it has displaced what should have been a protected high, which does give us confirmation of medium term bullishness. So we have to ask ourselves the question, is price going to be bullish for this supply zone, which has been left unmitigated, this supply zone, which has been left unmitigated, or are we invalidating this whole bearishness and making it a move higher? Of course, given structural laws, the two things that should arguably be correct is that price will mitigate one of these supply zones before reversing, before making a move lower. That is exactly what we want to see. So all I'm going to be doing now is have alerts set. As you can see, price has already pinged me into this area. Price already pinged me at an alert. We'll dive down into that in a second. But the overall standpoint being, we're either going to see price reverse here, distribute, start breaking lower and try and be involved in short positions, or we're going to see price break through this, run this liquidity high, run some of this liquidity, fill in the market inefficiencies within here, whilst also mitigating this position. If that's the case, we'll have an alert set right at this point here. So 0.7652. We'll wait to see price trade in, hopefully distribute, and then we will get involved in a short position, which we could arguably hold all the way down to the final target, partially along the way. Okay, so what's happening here, if we actually look down onto the 1 hour, so we've dropped down now from the daily, you'll see that we are within the zone that we were talking about. And what's happening is that price is still bullish. Now, as of right now, I'd argue that this is our protected low. So if this is to get broken before price disregards any of this, then we could argue price is ready to displace lower, price ready to reverse. This could be a lower time frame distribution, with this being a nice manipulation of this inducement that was built up, of this liquidity. Now, straight after that, you'll see that this wick comes to displace this low. So that is typical within a distribution. After the up thrust, we have a sign of weakness like this. Price comes up, mitigates the zone here. We could potentially now see price just trade down, breaking this low, displacing, at which point we can then look for sell position. So I've got an alert set here. As I said, if price breaks that, we will then look to go short. Okay, so now moving on to the XAU USD, so the gold market. I believe I included this within one of the last Sunday sessions because we had seen this accumulation down here in a major region of what should have been demand or support. Now, since then, we've had the displacements higher, confirmation that price has reversed in the market, the accumulation has been successful, and price is ready to start trading us back up. You see that, if you remember correctly, I had a demand zone drawn out here on this last sell to buy. Price only just tapped us into this region. I didn't find any entry confirmation, which is unfortunate because as soon as price did do this, we put the next impulsive wave higher. So it did play out the way I thought it would, but we couldn't get that step 3, which is entry confirmation. Obviously, we analyzed structure. We found our point of interest, but unfortunately couldn't find the entry confirmation. Regardless, you'll see that I did find some intermediary sells trying to trade price down into this region. However, since then, we have, as I stated, put in this next impulsive wave higher. Now, the parameters of this would be the fact that this right here should be a protected low. If we just draw that in. And this now should be the final target. So, assuming that price is ready to start breaking down here, we can decide to look inside of this impulsive wave higher and try to determine where I need to mitigate. Now, to me, the most likely position is right here. So setting an alert at 1931 or 1932 region. Hoping to see price come down, mitigate this position before moving higher. However, we could argue that we do have this last sell as well. I would say that this major push down has been mitigated by these moves. And then from here, price has continued to trade higher, left some market inefficiency in both of these areas. So we'll just have to watch and see what happens, see how much supply has been introduced at the moment, because it may be the case that price just cannot trade us all the way back down to this lower zone, given that there is not enough supply in the market. These are the two regions. This is the one I'm likely to be watching around that 1931, 1932 region, hoping to see price traders in, find some lower time frame accumulations, and then ride the next impulsive wave higher. Now, as for Euro USD, another one that we have included within a couple of Sunday sessions ago, you remember that I was trying to trade some intermediary bullish structure, with this, of course, being an impulsive wave. This now putting in the correctional wave. Of course, within the correctional wave, intraday, we could have caught many of these sell positions that played out quite perfectly, just mitigating last buys to sells. Now, price has entered this area of demand, or to me, the only region that needs mitigating within this impulsive wave. And we can see that demand does keep getting introduced. We do keep having rejection from this region. Price is really struggling to push through. So we're going to really have to see what happens here. Either price is now going to run all of this liquidity and just pretty much invalidate this bullish structure and continue lower, or we will see the flip side, price will displace its high, and then we'll have that confirmation that price has reversed in the demand zone and ready to take a next impulsive wave higher. If that's the case, as soon as we get a displacement, we can use the lower time frames, find buy positions, and have that take profit all the way to the final target around this region. Regardless, that is my bias, that is my outlook on the market. Chosen a few pairs there to run you through, give my bias on. But now I'll pass you over to Luke, who's going to do the same, pick some pairs of his own, and show you his analysis.
How are we getting on, guys? I hope you enjoyed James's analysis there on the few pairs that he showed you. What we're going to do now is basically run over what I'm looking at. So I've got my eye on two pairs. I've got Great British Pound to the US dollar, AUD to the US dollar, and I kind of want to run past some of the Japanese yen pairs. We've seen a lot of volume and volatility within these, and this is probably down to fundamentals. So we'll dive into that towards the end of the video, and I'll give you my input on that as well. So jumping straight into things, we can see how we've got the Great British Pound USD on screen at the moment. We have clear bearish structure here on the 1 day time frame. We zoom out a little bit. I have marked a last structural higher low here. So we can expect that with this bearish move, price could come down as low as this point, as low as this this line that we've drawn out here. this would still confirm bullishness if price was, bullish on the higher time frame structure. Obviously, we've seen bullishness here. This could just be a big retest before its next impulse up. So if we did want to capitalize on a short position, so selling into the market, which is what I want to do as this is the current trend, we know that our position should be safe up until, this low here. And then we can expect either a reversal or a break in this structure and a continued move down. What I've done is I've marked the most recent highs and lows on a more fractal look at the structure. So if we go down to the 4-hour time frame, we can see here how we are seeing this continued bearishness, which is great. We are breaking those lows, creating lower highs. Now we've seen price retest. That's fine, that's normal. What I'm looking at here is basically for displacement. So a break in this bullish retest. Once we have that, I will be looking for those sell positions, having my first take profit. So I'll probably take a partial here at this low and then go on to have my final take profit target somewhere down here. Now this is going to be a very big swing and it's probably going to be a longer term hold. This is what I'm looking for at the moment with this pair. I'm wanting to get in and stay in for as long as I can. What we can do is move down to the 1-hour time frames, see this bullish retracement a little more easier. We can see more of the structural highs and lows within this. What we are basically looking for now is displacement within that. So we can see here how price has set a high, which we've marked. It's come down to set a lower low. So we'd say this is the swing high. This is the swing low. It's then come up to set a lower high, which has yet to be broken. So this could be the new structural high if we see a break in this low here. So what we can do is we can mark this out as a structural low. What I'll be looking for is a break in this. So once we have a break, say that price was to come down now, is to break this low, that's perfect. That confirms bearishness. That's telling me that this bullish retracement has finished, as this is the structural low here. Price would then realistically come up. This would be the structural high, as this is the highest high that it's created since making this low. So price can come up. It won't break this high here. What we would look for then is some kind of displacement. So a break in this bullish retest here. Once we've had that, we would then jump on. I'll be looking to enter here, the end of, or the start of the next impulse, and then we would ride that down then. So that is my analysis on this. Very brief, quite quick. But yes, we've got bearish structure at the moment on the higher time frame structure. We know where price can fall down to before taking any reversal, before it goes on to set higher highs. We have marked out our fractal structure. So we've got a high set, the swing high. We've got the swing low here. In order to capitalize on a sell position, we need confirmation that bearishness and the next impulse is underway. So we need a break from this. Hence why I've marked this out. We would then look for displacement on the retest and then jump in and be holding until we sees fit. If we have a look here, so this marks just the swing low. So we could have just one take profit here. So if we manage to enter somewhere around here, we know that's 200 pips in itself. Then if we had, if we just left a third of our position on and we continue to ride that down, could be 500 pips there. So if we can get a stop loss, that's, 30 pips, and we have a 500 pip take profit, we are looking at a very good risk to reward return. Hence why I'm not too bothered about really refining my stop loss on this trade. I just want to get in and ensure that my stop loss is safe, above a structural high. And then, just continue to hold. Now, moving over to the AUD USD pair, we can see here how I've drawn a bullish channel. This was actually part of a Learn to Trade video that I've just recorded, and that should be out in the coming weeks. So keep your eye out on for that. I basically showed examples of how we can capitalize on both buy and sells within the channel. Gave a few good examples there. Again, what I've done, if we look at the higher time frame structure, we can see how it's predominantly bearish. We've seen bearish structure throughout since this peak high here. Price has continued to put in bearish work. Now this was a swing high. We had price come down, create a swing low here, and then we have since seen price retrail back up. Now, if price was to break through this structural high, then that is a suggestion that price is now moving bullish and we can expect new highs to be created. If we see a reversal underneath this, that would be great. We would look for those sell positions. So for me with this pair, it is now all about waiting to see what happens around this area. I think we will get an answer at the start of this trading week. But if we look here on the 1 hour time frame, we can see how momentum is really starting to slow. So yes, we are seeing bullish structure being put in, but we had a high set here, and then we've got another high here. So this would be the high. Lovely. We've got a low set. Perfect. And price seems to be ranging within this. So we could look down on the lower time frames. Let's try and find out what's going on. It's come to set a higher low. That is good if we are wanting to see price break above. What this is doing and what this is telling us at the moment though is that demand is being put into the market. So more and more demand is being put in. We can see all these lows being set in the market, all these higher lows as well. This is obviously a big higher low, and we can see all these lows being set. So that's telling me that people are buying into the market still. There is still a lot of demand being driven into the market. Now, what this could do is basically outweigh the supply that's sitting above this structural high here. And we could see price blast through this and go on to create higher highs. So when we see consolidation like this approaching an area where we know supply is waiting, if we are seeing a continued amount of demand being put in, so, you know, higher lows continuously, yes, we might not be seeing higher highs, but if we are seeing higher lows being put in, that is squeezing the price so much, and that is putting so much demand into the market that eventually it is going to blast through. If we saw consolidation where it was the opposite way around, then we could expect a reversal here. But what I am seeing is actually demand being put in. So I think we could see a break above this high, in which case we would be looking for those buy positions. Obviously, I would want to see price come up, break through this high, might retest, break through this high, then we can expect price to retest from this area. Once we have that and we have clear rejection, as soon as this high gets broken, we would be looking to enter, because through a bullish structure, we see higher highs and higher lows being put into the market. The highs get broken and the lows don't. So as soon as price is broken above this high that it's set here, that confirms bullishness. So we could, in fact, set a pending order from the high that it sets on the retest. And then as soon as price pushes above that, we would be in on the market. We would have our stop loss set below the low that it's set. And then I would take profit wherever we see fit. So that is my analysis for AUD USD. Be interesting to see how it plays out. We might not see enough demand be delivered into the market, and we might see it get broken down and pushed down. If so, we would look for the opposite to happen. So we would look for a break in this bullish structure. We could go back to the higher time frames, wait for these structural lows to be broken. So this one, or this one. As soon as we have that displacement, we would then be looking to enter in on the retest. So again, if price was to come down, break this low, so price was to come down, it's broken this low, that confirms bearishness. We'd wait for price to come back up to retest. As soon as we have the retest and we know that the retest is finished, we would look to enter in on the next impulse down. Now, how would we know the retest is finished? Well, we would look for confirmation by breaks in structure. On the lower time frames, this fractal structure. We would also look for confirmation candles. On top of that, we could actually use the Fibonacci. That's an indicator that I often use to dictate where price could travel up to or travel down to before taking a reversal. You know, there are many things that we can use as confirmation and confluence with this. It's just keeping our eye out and making sure that we jump on at the right time, not too early and not too late. Now, quickly moving over to the CAD JPY, as we can see, the market has been extremely bullish. Every single candle has been green. We've not had a red candle since the 9th of March. So this is telling me that all Japanese yen pairs are going to be weak. If we compare this to, let's have a look at the Euro JPY, we can see the same thing. USD GPY, the exact same thing. Great British pound to the Japanese yen, we are seeing the same thing. Now this can only last for so long. What I'd be looking for is for breaks in higher time frame structure. So we've got a high here. This was the last high that was set from this bearish move here. This was the last low set right here. So we know we've got leeway, so we can basically look for some kind of reversal within this and look to ride this bearish move down. You know, price may continue to come up and then it might consolidate, it will displace, and then it will start setting lows, lower lows and lower highs, and we can ride that back down. Alternatively, if price comes up, breaks this, we'd look to get in on the retest. Assuming we have the right confirmation, we could get in on that and take full advantage of a bullish move there. Me personally, I think it could come to an end, either at the end of this week or the start of next, in which case we would be looking for those sell positions. We'd obviously just go down to the lower time frames. We could look at the day time frame, the 4-hour time frame, and we could really capitalize on a real big swing. Yes, our stop loss would be a lot larger because this would be a longer term hold. This would be a bigger position that would be placed, but it could be a brilliant one. What we would look for is for price to come up. It would continue setting bullish structure. It might approach this area, reject. It would then start to set lower highs and eventually break the structural lows that it's created. It would then come up to set a lower high. This is where I could look to enter, and we could ride this all the way back down. So we would look to enter when we see a break in higher lows, and then we see a lower high be created. That confirms bearishness because it's broken previous bullish structure, and then it's gone on to set its first lower high for this bearish move down. I could look to buy into the market, but we can see how this move is already well underway. I wouldn't really feel confident or comfortable trading a market that's already, taking its move up, should I say, or taking its swing. I would rather wait and look to capitalize on the reversal or some kind of big retracement, as I feel like that's more, I think we would capitalize a lot more on that. Obviously, as soon as we see breaks in bullish structure, we'd be looking for those reversals. So if price came down here, broke this low here, we could then expect price to come up to set a lower high, and that's where we could look to enter, and then we could ride that down. Yeah, so just keep an eye on structural lows, structural highs, higher highs and higher lows for your bullish structure, lower lows and lower highs for your bearish structure, because if you can understand that and you know how to read that both fractally and on your higher time frame, you can quite easily capitalize in the markets. And then just using other things like indicators, other knowledge within trading, your trend lines, your candlestick formations, things like that, to get extra confirmation and confluence. That's all you need. I think it's very important to just have a good understanding on price action, understand supply and demand, and then if you have tools as well that can basically give you the confirmation you need, then brilliant, you're well underway. Now, my analysis this week has been extremely brief. I have basically just given you my bias. I've not really gone into too much detail with my analysis. I just want you to understand, the structure of the market and how to actually look at it. I think that's the first step with any analysis. I think you need to understand what the markets are telling you just by looking at it. You can draw these lines, you can draw patterns, you can draw this, that, and the other. That is just going to clog your brain with pointless things. I think the most important thing with Forex is to actually understand what the markets are telling you just by looking at these candlesticks. If you want to see more in-depth analysis, like James said earlier, get yourself involved in the Learning Lounge group chat. It is free. There is a link in every single description of every single video that we post. It is a no-brainer. If you are involved in Forex in any way, shape or form, you're wanting to learn more about Forex, that is a brilliant group chat to be involved in. We post loads of educational videos in there. We post loads of analysis in there. We post just normal posts. James does a fundamental report every Sunday as well. So you are fundamentally educated every single Sunday. You know exactly what's happening in the coming week. Yeah, it is just a great place to go to if you need extra information. But yeah, that's me. I hope you've enjoyed my analysis and James's analysis. If you have done, please leave a like on the video. If you have any feedback, by all means, drop a comment below. We love to read your comments. It's been nice to actually see more and more comments being put in these videos. And it's nice to kind of interact with you guys as well. So yeah, any feedback, leave a comment below. If you're unsure about anything, message me or James directly, or leave a comment below and we will reply to you. And yeah, we will see you guys in the next Sunday sessions video. Thanks.